Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, December 8th, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought, let's take a look at the week that just took place. Looking at the Dow, the NASDAQ, the S&P 500, Russell 2000 in that order, we see that we have positive numbers in the Dow. We have negative numbers barely in the NASDAQ. S&P 500 for the seventh week in a row, giving us a positive end to the week. And the Russell 2000 up 9.2%, 9.2 points, giving us a percent change for the week. Percent change out of the Dow was a 0.7%. NASDAQ down just a tad, down 0.2%. S&P 500 up 0.4%, and the Russell 2000 up 0.8%. Be aware that the January effect, that is the move to small caps, generally begins to take place the second week, third week of December. So that time is coming as we look at what is called the January effect. Pay attention as we expect a gain out of the Russell 2000. Remember, it also has been the laggard. Year to date, looking at the Dow up 8.3%, and NASDAQ up 14.5%, S&P up 12.3%, and finally the Russell 2000 finally in positive numbers, up 1.6%, and watch for that January effect. Looking at the coming economic announcements, Monday we've got basically nothing taking place as far as things that will influence the market. Looking at Tuesday, we have the wholesale trade number coming out at 10 o'clock. And looking at Wednesday, we have very little happening, nothing really showing us any big movements in the market. Then we come to Thursday, looking at jobless claims. Boy, we had a surprise there last week. Retail sales also at 8:30, import and export prices at 8:30, and business inventories at 10 o'clock. Then finally on Friday, we got PPI consumer sentiment at 9:55. So the main economic announcements coming up for the week, coming up at the end of the week, which is where we expect to see some action. Last week we had non-farm payrolls, which came out on Friday, increased by 321,000, up from a expectation of around 243,000. So we see that it was quite a surprise. In fact, it was the biggest increase in payrolls since 360,000 jobs were added in January 2012. With an increase in jobs of 321,000 in November, a bit of a surprise. One would expect the market to run. Well, is that exactly what happened as we saw these numbers come out? It turned out that if we looking at Friday, we see that there are very little surprise in the market. Notice we continue our deep V as it continues on up. We're in a consolidation zone right now where we're looking at this area right across here, and we're looking at a high, waiting for our next breakout. Potentially we'll see that breakout with our Santa Claus rally. Now, when we look at just the last few days of the week, looking at the 5 days of the week, we see that we've got a bit of a dip on Monday, and then the rest of the week went back up to its previous highs. Still banging out new highs, expecting some kind of a breakout between now and the end of the year, as the Santa Claus rally certainly is expected to continue. With that thought in mind, let's take a look at some of the other indexes. Looking at the Dow, we see that it's basically been pretty flat for about the last month. A slight gain to it as it moves up higher. We had another all-time high on Friday as we see this continue on up into new highs. Looking at the Dow, we see that there we are. There's our new highs looking forward. And then finally, let's take a look at the next one. Taking a look at the NASDAQ. We see the NASDAQ a bit of a laggard this week as we see the NASDAQ continuing certainly in the upward trend with our big V that we had. But we noticed that the NASDAQ didn't hit all-time highs this week. Didn't give us a new high. big pullback on everything on Monday, and then we saw everything increase back up and returning to some of its previous moves. And then finally, let's take a look at the Russell 2000. Looking at the Russell 2000, this is where we expect to see our January effect as we see money move into the small caps. And generally, this will start the last couple weeks of December. Used to be just the January effect, but now there's some movement into this area a little bit sooner. Certainly a chance to watch this break out as we see the Russell heading to its previous highs. And if what I expect to see happen, giving us new highs for the year out of the Russell 2000. Russell 2000, certainly something to watch. Looking at the VIX, we see, oh, there we are, back in the 11 numbers as the VIX drops down. Not a lot of fear in the overall market. Looking at our bond market, there we are. We saw that the bonds basically had the big pullback this week and then didn't come up to its previous highs. But the bonds certainly show us that we're very near the highs, and it would have been quite a rally in the bond market as we look at the last few years. Looking at gold, we see gold not showing us any great strength. No big movement into gold as we see it heading down and going on its next bounce downward. Gold not showing us any great movement to get there as a position of safety. Finally, looking at the SPY, what kind of volume do we have for the week? Well, there we are as we look at the week. Last 5 days, we basically had right around average volume. A little bit more as we looked at Thursday and Friday. Of course, Monday with that down day, we ended up with quite a bit of volume, and then we got our bounce back up. And running a bit above average as we're showing lots of action as we come into December. Finally, let's take a look at our financials. Looking at our financials, we see that they led the market up, showing us what the financials actually can do. And we see we got new highs out of the financials as things keep perking along for society. We didn't see the market move all that great on that news from payrolls. Kind of surprised. One would expect that maybe that would cause the market to pop into new time highs, and we really didn't see that. It's kind of interesting with those numbers. Were they quality jobs, non-quality jobs, whatever the case, and maybe some confusion over whether the Fed might change their positions as far as interest rates with showing that kind of move. All of it just a little confusion in the market where we don't see the market move too much one way or the other. Looking at oil, look at that. New lows as we see oil just keep plowing lower and lower. Headed toward $40, below $40 a barrel. Time will tell. Oil, certainly in a bear market. Remember, when we have things go into a bear market, what's it providing for us? Our next opportunity. But you never know how far that knife's going to fall. For those of you that are gold members, stick around. We'll go through our stocks to watch, see how they did on this very flat week in the overall market. Did show gains, some new highs, but no big move out of the market as we look at the first week in December. So with that thought, thank you so much for being here. Enjoying Market Forecast brought to you by Options University. It's Butch Shorak. It's Monday, December 1st, 2014. Trade what you see, not what you